Ladies and gentlemen, today we are going over a long overdue video going on what is the single best long-term investment for Americans. Now, before we get into this, I want to hear what your guys' thoughts are. Nice thing is, when it comes to long-term investments, we have a plethora of options. It's not one or the other like we'll have later this year, but we have real estate, we have gold, we have stocks, mutual funds, we have savings accounts, CDs, bonds, cryptocurrency, a whole bunch of different options. So what is your thoughts on the single best investment? I'll tell you, over 1/3 of Americans are all in agreement that there is one single best long-term investment that stands above them all, and we're going to dive into it right now. Alrighty, here it is. We're going to go over the number one long-term investment, and as you can see by the screen, it has voted real estate by 36% of Americans to be the number one long-term investment. So let's kind of dive in and look at some things here. So here's the chart. It comes off of a study done by Gallup. It's their annual economy and personal finance survey. So as you can see, this year, 36% of Americans say that real estate is the single best investment. That also is 22% saying stocks and mutual funds, 18% with gold, 13% on savings accounts and CDs, 4% bonds, and 3% on cryptocurrency. Now, many people are probably going to be a little bit shocked by this outcome because of what they've seen so far this year and at the end of last year with the real estate industry. Now, yes, I am fully aware that interest rates are high for what we have been used to, but they're not super high for what we've seen, obviously, in the history of real estate. But a lot of people are uneasy about those 7% interest rates. But even in that high interest rate economy, you can see that people are still saying real estate is the number one long-term investment. Now, it has gone down from the past 2 years. Obviously, if you look here, we kind of peaked at 2022 with 45% of Americans, nearly half of Americans saying that real estate's the number one investment. It's gone down to 38 last year and now 36 this year. I do think a lot of that is to do with the high interest rates, the low inventory nationwide, and then obviously the lawsuits and whatnot that you've seen going around in the news these days. So there are still a ton of factors kind of nagging at real estate, but overall it is still listed as the number one. Now, a lot of that has to do, or I think should play into account for, is what you see here. U.S. price growth by decade. This chart is basically showing you that if you buy a house at the start of a decade, you can see that it is going to be worth well more if you hang on to that house for 10, 15, 20 years. The appreciation could be massive on that home. Now, not only is there appreciation, but if you are using it as rentals, there's more income, you have tax write-offs, there's a bunch of different benefits that will come into play here. But let's just take a look at some of these years. As you can see, every single one for the last, since the 1990s, 2000s, 2010s, 2020s, we have seen a huge growth, with the lowest being back in the 1990s at 30.1%. That's a hell of a return if you ask me. Now you got 44.7% in the 2010s, you got 47.3% in the 2000s, and obviously that had some issues here that you can see in the middle of the graph, or I guess towards the end of the graph, when we got into that 2008 time frame where things really took a dip. But as you can see in the years following, it has risen back up. And so far this year, we're already at 47.1%, and we're not even halfway through the decade. So is this one going to end up in the 50s? Is it going to end up in the 60s, 70s? What percent are we going to end up seeing this decade? Or do you think it's going to be like another 2008? I know there are plenty of people out there thinking that is a possibility. Personally, I don't see it. We don't have the laxed lending rules that we saw before or the high influx of inventory. We are quite the opposite at the moment. So as though we are seeing a little bit of a real estate recession right now, it's nothing like the 2008 era. In my mind, you might think differently. But going back to that chart that we were looking at, there are a lot of other things that you can point out here. Gold has gone down I know gold tends to be a fairly high option for a lot of people. For me, I just don't really understand it. Like, I know people love gold necklaces, gold watches, jewelry, whatnot, but to me, it just doesn't, I can't wrap my head around trying to go buy chunks of gold and just kind of locking it away in a locker for who knows when. The other one that you have seen here, stocks and mutual funds. That one's actually up on the rise. And I think that's going to pick up a lot of kind of the slack that you see from the real estate market dipping. I think people are going this route just because they're kind of unsure on what's going on right now. So stocks and mutual funds was at 15% last year in 2023. Now it's up to 22%. Another one that's grown, savings accounts and CDs, is up from 9 to 13. Now, if you follow this map across, you can see that it was higher for quite a long time, and is a pretty stable one for most people. It did take a pretty big dip from 2020 to 2021, and then has kind of been riding it out since then. But that's kind of that slow, steady, it's just there kind of thing that a lot of people tend to be comfortable with. Cryptocurrency came out hot in 2022, starting at 8, and has then dwindled. And I think that's another one where people just don't have a whole lot of information with it. It's very young. There's not a lot of studies on it. There's a lot of different information. So it tends to lead to different things. But to be even more interesting, let's see how this changes in different brackets of wealth. So there was another study done by Gallup as well that we'll look at here next, that's going on the perceptions of what is the best long-term investment by household income. So we have two different brackets. We have low income, which is going to be less than $40,000, middle income, which is going to be $40,000 to $100,000, and then upper income, which is going to be $100,000 plus. So diving in here, you can see real estate is actually lower in the lower income brackets, coming in at 33%, increases to 36%, and then to 40%. Going into stocks and mutual funds, that one also is going to increase as it goes up, 14 to 21 to 31, so it makes a pretty big jump going across the different income brackets. Gold decreases as it goes across, savings account decreases as it goes across, bonds is pretty much the same, and cryptocurrency is pretty much the same. Now, there are a few things or reasons why I think it is this way. For real estate, I think one of the biggest things to point out on why higher income homes think it is a better investment than the lower income ones, and that's because of the price to get into it. I mean, I'll be frank, it takes money to get into a house. Like, you have to come up with that down payment. Even if you have one of those great 0% down options where you don't have to put up a lot of money at the start, you still have closing costs. You still have this big chunk that's going to come out at the start, which is what I think deters a lot of people. Another thing, those upper incomes, they have more money coming in, so they're okay throwing some of that into an investment and not being able to use it for themselves personally, allowing them to make those bigger investments, which help them out in the long run, but it is harder to get into. Now, some of the other stuff going into it, I think cryptocurrency kind of stays the same as I talked about before, just kind of with people not knowing what it is, what's going on. I think gold's kind of a similar one. It's been around forever, but it has been pretty volatile, where some of these other ones are a lot more consistent and have the chance to make more return. I think you also will see stocks increasing for the same thing I kind of hit on real estate, is those higher income areas have some more, let's say, play money where they can be a little more aggressive to try to get those better returns. They're not banking on it as, oh my gosh, I need this money. They're trying to think of what can set themselves up the best for the future, and they're playing around with it being a little more aggressive to help themselves out in the long run. So those are some of my insights on what's going on. I would love to see what you guys think on why it is the way that it is for the long-term investments. Let me hear what you think on gold, savings account, bonds, cryptocurrency. Obviously, you heard what I think on real estate. So let me know what you guys are thinking, why you think things are the way they are, and what do you think is going to change. Now, here's another one. What happens if, let's say, interest rates come down? Now, while I'm on that topic, I do want to show you another one. I've hit on it this year for a bit. I was hoping it was going to be the way that it was. It turned out not to be. But that's going to be going into interest rates. I know it's been a topic everybody wanted to speak on. Everyone got super excited for earlier in the year when the Fed told us they were going to cut it 4 times. And now we're sitting here at the start of June, and they haven't really gone anywhere. And a lot of people aren't saying it's going to go anywhere. They did come out in their last meeting and say that they don't plan on increasing it anymore this year. But they didn't really hint a whole lot at actually cutting it. So a lot of now predictions that we're saying 4 cuts, maybe we're going to get down into the high 5s by the end of 2024. Well, they've changed their mind and are stating that things are going to hang out here where we're at around the 7%. And likely going to be there till later next year. So as though I would love to see a rate drop, and I think that would, if there was a rate drop, it would boost real estate up even more. That doesn't seem like it's coming in the near future. But then again, it's still listed as the #1 best long-term investment. So don't let that hold you back. That's what's going on in the real estate news today. Hope you have a fantastic one, and I'll see you on the next one.